The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, the 5th of May. And we're looking at the Dow. Well, I've got crude oil right here. It's down $1.20. It's 57. Boy, that's making this dreaded H pattern. If it breaks under 54, that's a real problem for crude oil. I wonder if that's talking about the international economic markets. Anyway, as we go, let's go back to this. So there was that big spike in INDU. And I wasn't sure what it was, but evidently it was the ISM data. Look at this. You've got the Dow down 141 at 41,174. We're in a leg C. If there's a new high today, it's going to be tough to do. But just let's say there's a new recovery high today. Above the high that was made at 41,386.19 on Friday. Goes to 0.20. That becomes a continuation of leg C. But if it fails to get there by 1 penny, then what we're talking about is a peak C. And then in the Chapman methodology, I may as well show this because I haven't shown it for quite some time. Those of you who have listened to me for ages know exactly what I'm talking about. I'm talking about peaks and troughs. Essentially what I'm looking at here is that I try to identify the lowest low bar. That's the technique that I use in Chapman methodology. I've done it for decades and decades. And then from the lowest low bar, count each successively higher peak and alphabetize them sequentially, uppercase A, B, C, D, E, F, G. It's at that fourth highest peak, peak D, that other things can happen. The objective is to go from a buy signal, upgrade it to a buy mode, which says you should see whatever you're following, go to at least a D. Well, where are we? We're in, let me just do this very quickly here. I don't like to do this quickly during my show, but I just want to see. Yeah. So what we're looking at is we've gotten to a leg C in the Dow. There should be a peak C. What if we don't make a C today, and then on Tuesday, we just managed by a fraction to go to a D? Underneath the 200 period moving average, 41,590, very strong resistance. Well, as I'm looking at it, a chunk of the move has been made from 36,661 to where we are right now, or where we were on Friday at the high. But the technicals are confirming that there is a buy signal to buy mode, which says you should be at least at a peak D, and you could go higher. With that environment, with that that information, the way I look at it, I'm suggesting that we can then start to look at the weekly charts, because the 200 period moving average right here in the Dow, and I'm going to go to the others as well, but the Dow is at 41,380. So if there's a move above that, you'll start to see the black 14-period moving average start to rise instead of being flat. You'll start to see the pink 9-period, this is the weekly chart, 9-period moving average, which has turned up, have a better chance to try to get close to the black line, but it's going to take at least 500 or 600 or maybe even 700 points on the upside. That's a tough ask right now. The MACD is, the histogram's improving, but that's all it's doing. Remember when I said the histogram in the daily chart's improving? That's the reason why when it flips positive, very soon after that, you should get the 9-period moving average crossing positive in the daily. As therefore, the dailies in the major indices are giving very strong signals on a shorter-term basis. I haven't got to the weeklies where I can say, well, April the 7th was the low, and this is already the 1, 2, 3. This is the fourth week after the low. This is great action. No, it's good action, really good action, especially in the monthly charts. But this is a process, and it's a process that's fraught with momentary positives and negatives. As we've just seen, even today, they got that big spike earlier. Now it's given back a chunk of that, but it's still holding well. It's now above where it was, and that's important. So if we go to the S&P, so what I'm looking at here is this key support in this 41,000 area, maybe even 40,950s, but that should be good support on the very short term. The S&P is looking at something a little different. Why? Because it's already at the 200 period exponential moving average, only in leg B. This should go to a C. I mean, this is nice action. I just keep jumping over to the E-mini because it's giving us so much information here that says this is nice action that we're looking at. And if it continues, there's a chance that we close the day much nicer than where we started off the day. I just need to put in a stop here because I just got that. Okay. And that's a little bit more than I wanted, but it doesn't matter. Okay, now what we're looking at is in this choppy environment right now, look how steady this chart is. Just all of this is a leg B. We haven't made a peak B until maybe today, and that peak B will say that if there is a close below the high of Friday, which is in the S&P at 5,700.70, 1 penny lower today or more, says, oh, you've made yourself a peak B. Now you should go to a C and a D because that 200 period moving average is both a magnet and it will become a propellant line if we can go above Friday's high. Close above Friday's high, that is. Now, what's really important is where's the support? Well, the support is at the open on Thursday, and that is at 56.25. So it's about another 20 points lower. Okay, we're watching that closely. Now I want to go to something that's actually very important because it's the QQQ, which has the semis. It has it just has a whole bunch of very important sectors within it, and it's down 2.9 or down 3 at 485.94. Having gone already to a peak C, a leg C, maybe a peak C today if it doesn't go above Friday's high of 490.91. So that's going to be something to monitor very closely. And as I monitor it, I just need to do that. Whoops, a little too much. I was talking at the same time. That was a mistake. It doesn't matter. Now what we're looking at is within the context of the technicals. Look at the MACD. It is so strong in the QQQ. Look at the stochastic flattened at 94%. I love that. Look at the on-balance volume, a little bit overbought, but still very good. Look at the 914 and look at the price way over the 9. So that just says to me in the QQQ, NDX 100, which is the trading vehicle in Invesco QQQ Trust Series, action is still very good. We've made a leg C. Now, what if we go to a peak C today, and then on Tuesday or Wednesday, we just fractionally go above the previous high because my target has been 493.62 by Monday or Tuesday in this sequence that I talk about. Find the plumb line for the number of bars on the left equal to the number of bars on the right. And if it doesn't fit exactly, then you've got to find a particular candle. When you find that candle, then you check out to see, I had this, where did it go? I thought I had it right here. This is the Chapman Wave inside wedge target repellent line, and you went up to it on Friday, now you're pulling back. So this is still very strong action. Now, as it stands, the weekly chart has seen a much better action and reaction to the price movement from the low of 402.39 around about the 7th of April. We've gone all the way to where we are now at 485. We went even higher on Friday. So this weekly chart is improving a lot, and the monthly chart has made a higher high than last month, and that is a really good sign after this huge long wick. Okay, we'll be back in a moment. As I go out, I want to go. IWM Russell 2000 is down $1.74 at 198.73. Has already made the leg D. So will it make a peak D today? I've got it going another 3 or 4 days before it can get to the 203.33 potential target high. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
All right, everyone, we're back, and we're looking at, this is going to be quite exciting because we're looking at action that says there's some buying coming in, not a lot, but some buying, and the buying does hit resistance levels, but the Dow is attempting, and the S&P trying to make a stair-step move with slightly higher highs and slightly higher lows. Is that going to work all the way through the day? We'll see, because I was looking at a day of consolidation here after three spectacular moves going Wednesday, Thursday, Friday. You'd expect that. I mean, how can you not expect that? All right, now let's go on. Now it's very important for me to look at the SMHs. Semiconductors down 57 cents, having made a leg C, could be a peak C today. We'll find out soon enough. But even more important than that, the weekly chart needs a lot of work. So this is the one that has me a little worried in the sense that it's got a struggling, the actual physical look of the chart says daily has been quite good. The weekly has been good, but it's in a struggling phase right now because there's a lot of resistance in the area between where it is now, 218, to I would even say the 222, even though I have a 232.42 target. If we can break into into this area of 222. The moment we get to 222, I think we can start looking up. At this point, it's working its way higher. That's all it's saying. I do want to go to gold. So let's see where gold is right now. It's up $80 at 3,324. And this is just telling me, remember I said, I've been talking about this for weeks and months. I've been saying, to me, gold, if it moves because it's a geopolitical, economic barometer, insurance. It's that gold coin that says, go to gold if you're worried. And that's really the geopolitical, this is countries that are buying gold, huge amounts of gold. Well, they took a bit of a rest from the high that was made around about the 17th, or was it 18th? No, it was the 22nd, the high of the continuous contract at 3509.9. And it pulled back to Thursday's low of 32.09. I mean, that's quite a drop. But when you think about how it's really, if you're considering how it's gone almost vertical, look, it's had just one peak right there. That was that peak where, for a moment, it had a little bit of a breather between the week of the 28th of February at 3,003 to 29.71 the following week, and then it was off on its way. If you consider that move, basically 2,600 to the 3,500 level, straight up, now it's taken time more than price. And one of the reasons why we've taken bits off our physical gold, PHYS, is the position for subscribers that we've had, but I have to keep a good chunk, is because this is a market that is telling us the backdrop of uncertainty. Remember, markets always deal with uncertainty. What they hate is uncertainty about uncertainty. Well, I'd say there's uncertainty about uncertainty about uncertainties, maybe at least two times removed, right? And if you think of it that way, then gold is in play. Gold is in play. I would say it's more in play, and you can go to the gold miners, and you can see that it's more in play as gold rather than the gold miners. Look, here's the GDX. GDX has had a pullback from the 52s down to the 46s. Now it's at 48. Let's just check. You see the daily on the left, in the middle is the weekly, on the right is the monthly. Just keep your eye on the monthly in the middle. Have a look at this. It just seems to me, on just a purely physical, just looking at the chart, that the monthly chart of gold is held a little bit better than the GDX. And that's just telling me that money is going into gold and that the gold stocks are moving up. And not all of them. And then just look, here's GOLD. GOLD trading from the 21s down to the 18s and now trading at 1852. Look, that's not a great pattern. Let's go to my usual ASA, the South African gold miners. Way, way better. Look at that month, weekly. That weekly and monthly are way superior to some of the others. Let's look at ABX. No, if they've changed the name. Now let's just go to the, I think it'll be AEM is the one we need to go to right now. There are AEM. Not bad. It's funny, there's no other way I can count this. This is a peak C. It says it should go to a D, and all the others already have made a weekly Ds. Meantime, back at the ranch, Agnico Eagle trading right now up $1.92 at 113.04. It made a high, I should have typed that in, of 126.76 on the 21st. 126, here we go, 126.76 on the 4/21th. And so that was a bit of a dip down to the 110 area, 16 points, 14%. But now it's coming back a little bit. But that 9-period moving average today is just flipped negative. The day's young. Does it stay that way? So I'm watching all of this, and I'm just saying gold is something separate. Gold is something separate to silver. Look, silver is up 24 cents. It's just a different chart formation altogether. And what I like to do is I take technical tools and I say, you know what, this is redundant. So let me move this right here, and I'll move it up to where it makes much more sense. This is the Chapman Wave inside track. There you are. Repellent zone. And I'm going to move it up here as well. Click, click, click. There it is. And I'll move it, make it even more narrow. There it is. So that's just saying to you that this is a different chart altogether. Silver is not anywhere close to gold and hasn't really kicked in, and it's just kind of sideways. Now I need to go to high-grade copper. High-grade copper is up today, up 0.01. Also, so it actually looks like the silver chart, right? It looks like, look at that big, it's a huge rectangle for the outer bands from the 5.40s to the 4.10s right there. And it's just stuck in the middle. Okay, so not really doing anything. And I do want to go to, right now, I want to go to the VIX index, VIX. Just take that moment in the beginning part of the week just to give you a sense of what I'm looking at. VIX is up $1.07 at 23.75. Doesn't seem to be going anywhere right now. Day's young. But if it does go from 23, it's actually in the 23s. That's quite high when you think about what the market has just done. So I'm going to say that if the VIX index actually pushes into the 2430 area later today, you'll see another turn down as the market closes weak. But if for some reason it goes down to 23.32 or lower, I'm going to suggest to you, watch the market, because if the Dow's come back, it's already down, only down 72. If it comes down to minus 30, I see just subscribes to my opening call. I do a daily call every day on the Dow. It could be any of that. I do the Dow because I always do the Dow, but I do this. I can do anything because that's as long as the chart is in front of me. But I choose to do the Dow. I said, if the Dow has come back to about a minus, what did I say? Let's move there and go right to the chart. I said, right there. That's my opening call. This is my daily chart. If there's a mid-session rally to just a minus 60s, a much milder close is likely, and the 120-minute chart on the Dow did make a peak F, so you can expect some kind of a pullback. So that's what I'm looking at, and yeah. All right, now let's go on to some other areas. I want to just really quickly, we go to crude oil, still down $1.50. Not looking good. Looks like it wants to test a 54 low of early April, about the 7th. And the one other thing I want to look at right now is the TLT. And the TLT is down 65 cents. So it yields, the TBT is up at 3.62, 36.21. And I'll be right back. Basil Chapman, Dow's down only 56 now. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. So the iShares China Large Cap ETF FXI is trading at $34.94, up 3 cents. It's in leg C. It's holding very nicely. It looks to me like it's kind of building some power. If we can get it from $34.94 by Wednesday of this week, and of course we've got Fed talk the Wednesday. It's going to be a tricky week. If we can get this to just even tag 35.90, maybe 36, that'll be really good action, just in terms of helping that weekly chart maintain that M-shaped pattern so that the MACD, which is deflected higher without crossing negative, can go even higher. That to me would be really important. And we have the I'll go to Queb, which is the internet. They go kind of together. The others is already a D, but it's the same pattern. The 200-period moving average in the weekly is 34.14. It needs to get to 34. Actually, this has to go to 34.92 to 35.25 to say I'm pushing away from that 200-period moving average. Meantime, we've got a sideways consolidation going on right now. So I think I did everything I needed to do. A couple of questions came in. Where did it go? Could I look at Bitcoin? Bitcoin is trading. I don't know why I forgot Bitcoin. Trading down 32.85. This is a leg D going to a peak D. I'm anticipating that there's going to be a little bit more of a pullback for Bitcoin. The 9-period moving average this week has just crossed positive. So the week has only barely begun. We're only an hour into the first trading day. I'm watching this one closely. So I had a question about stock like Amara. Amara is Amara Holdings, digital asset technology, Bitcoin mining. Yeah, it did a big pullback, and I said, I'd look at it maybe at the 1320 or even slightly, did I say slightly low? I can't remember now. But I'm a little concerned about it, only in that it has to hold right here, because if it starts to slide deeper, it's a slightly different pattern than Bitcoin, even though they trade kind of in the same direction, not the same parameters at all, but same direction. And IBIT, so the question was IBIT, which is the iShares for the Bitcoin, it's the ETF. That's a much better chart pattern. I like this chart pattern, but it's got the Chapman Wave inside track repellent zone, so that even if it rallies, when it gets to the 57.54 level, it really needs to climb above. It needs to get to the 59s very quickly. This just says, I've had a big move. I've gone from the 42s to the 55s. I need a little bit of a break, and that's really what it's doing. But this arching over pattern makes me a little worried, because if it takes out this low right here, the low of Wednesday of last week, which is at 52.76, this is it goes to under 52.50. To me, that says 52.48 is the 14-period exponential moving average. Now I have to monitor it most closely. Anyway, I should just say we have been along for quite a long time with the IBIT. We've taken a little bit off. We just, as far as I'm concerned, this is still in play for the upside. But right now, in the shorter term, I'd just be a little bit careful. And in fact, if you're waiting to get in and you haven't gone in yet, either keep a stop really tight, because I think you're going to have another chance. And if you want to add, just wait another day or two. I just need to see that this starts to hold the support that I'm talking about. Now, most importantly, there's a lot of micro biotech been giving me flashes of just readings that say to me, watch these closely. Look, yes, where did it go? This is BioCryst Pharmaceuticals. Even 3 days ago, I said, yep, this looks good, and it's only in a B. It's worth trying. I didn't even do that. And today it gapped up. It's up 10% at 9.87. It's up 93 cents. I don't know what the news is, but it's only a leg A, a brand new leg A in the weekly, I believe. Yeah, that's a full ABCD right there. So this has to be a new start, and a leg C in the monthly. So this is BioCryst Pharmaceuticals. I don't know what their specialty is. ABEO, I believe that's in the area, same area. Abiona, I mentioned this on Friday, therapeutics, cell and gene therapies, that went to peak. See, now it's pulling back. But isn't that interesting? Look at these big moves that these things have had. OCUL is another one. Here we go. This is ocular therapeutics, Allotex formulation, delivery systems. Went to a leg E. I think I showed this on Friday. I said E, it should maybe it's going to pull back. Well, it did pull back today. It's down 90 cents, down 10%. That's how these things move when they in the single digits, 7.90. But on the 200-period moving average, worth looking at, because I think if that 9-period moving average in the weekly chart actually turns positive, and actually the look of these, look at this. This isn't the usual biotech that has a monthly spike up and then makes a long wick because it closes at the lower part of the candle. This is very different. There is something going on here with ocular therapeutics on the chart that says this is a much more viable up move, and it's worth taking a look at. You don't have to get in or anything right now, but it's worth looking at it to see if that big spike from last week, and now we're in the middle, we've just had an inside bar for the beginning of the week, whether or not it can move a little higher than this. And the next thing we want to look at is KPTY. KP, is that a T? TI. Yeah, KPTI is Cariform Therapeutics. Look at that long leg for the leg D, and is making a potential peak D today. Look at this leg A in the weekly chart. Not a great looking chart, but that daily chart going from the 3.11 at 3.51 all the way to where it is now at 7.52, having touched 770s. That, I mean, something's going on with these things. ARVN, did I write that down correctly? Oh, look at that huge, I typed in Aravanus Inc., Protac protein degraders. Not sure what that means. But look at this. It went to an A, then it had a sharp decline, and now it's trying to fill that gap. But look at these. Yeah, that's the thing about biotech. Look, one day it's trading at 18, and the next day, whoosh, down to 10. I mean, huge gap. So in the biotech area, you just have to be really careful. You've got to do your homework, and at the same time, you've got to have a lot of confidence that and patience. All right? So you need two things. You need PATIENTS and the one with the C, the patience. All right, let's just go back. Yeah, I think, see, this market just keeps trying. Now the Dow's only down 26. You know, this is a fascinating move because within the context of having pulled back so sharply after having pulled back after such a sharp 3-day move last week, I'm kind of impressed that buying is at least coming in, and as long as the buying is coming in, it says, all right, then we'll see what happens next. Okay, I just got that, and I need to do this right here. All right, I'm going to do this when we get back. I had a bunch of questions about stocks. I'll look at them as soon as we return. We want to look at some of those, the biggies and some of the smallies. I'll be right back. Basil Chapman.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So let's also look at Chewy. Chewy Inc., online retailer of pet food and pet products, trading at $37.27, up 61 cents. You know, I've liked this for years. I've had this chart. I did have it all notated. It made a peak C minus because it came back from the 20 low that was back in 2020, soon after the IPO, and now it's starting a brand new move to the upside. Now I don't think we've ever owned it for the subscribers, but it fits into the category of perhaps under the radar in this environment because they can pass at least to a certain extent. Any of the taxes, just to a certain extent, they can ameliorate some of the blows that some of the other companies will undergo. So I like this. It's trading at $37.27. There's a left side high that I don't want to do it now, right now. I'll talk about it rather. The 37.00 round number, that's 80, right? Yeah, it must have been 37.80 high of the 3rd of March, and here we are. So there's 3.3. Now we're on 5.5. So that tells me that is a target. But more important than that, if you look at you see maybe I should draw this in. You'll do a little technical Chapman wave notation here. So I would go to this left side high right there, and I would say to you, there's a measured move from that high. What did I say? 3.3. Yeah, from that high to, that's way too long. We should get this sooner, but I'm just going to put it in right there. Yeah, this is just, I'd read you this because that says by the 13th of May. I think it's within the next couple of days. You should see a test of 38. Today's high is already 37.43. So I'm going to change that. I'm not going to do this right now. I need a little more time. I would take it to a particular candle. And I'll do it right now. I'll go to the candle that I would normally use right there. I'll click on this, and I'll say within the next week, right? There it is. There. For the next, up to the 7th. Today's the 1st. So by Wednesday, there's a chance that it hits 38. All right? That's the way I would do this. Do I have a Chapman Wave inside wedge target repellent line? Yes, I do. And it's already hit it. Okay, I feel a little more comfortable about that. So the question is, you just said chewy. So now I'm going to do something more about it. I'm not just going to do it in terms of looking at highs or lows. I'm going to look at it and say, would I buy it right now? And the answer is yes. At 37.26, I'd start a position. And why would I do that? Because there are three things that are really important to me. One is the weekly chart has got the green 9-period moving average. The MACD is good. The relative strength, the little gray line there, and the daily is still very positive. On balance, volume has a long way to go before it gets overbought, and the stochastic's at 85%. So I do like it. My first target would be 38, but it's really the 38.90 to 39.30 area in this week. That if it's able to tag that this week, not only will it be positive, but look what it will do to the weekly chart. It will continue this gray leg A, and say that now I can do the same as I did in the daily chart, but I can do it in a weekly chart. And that's even more important. Look at this. So now I can say I'm going to go to a lopsided cup formation. And the lopsided cup formation says that in the month of May, and we've just begun May, of course, I could be considering, and where would I go to? I'd have to go to that candle there. For now, I'm going to go to the low and say it could be a 1-to-1. In other words, the left side, the plumb line, is from the high that was made the week of the 31st of January at 40.09 to the low that was made at 29.83 the week of the 11th. And I'm going to just click this and say, on a worst case basis, this can go all the way to June, the week of June the 11th. I'm not doing that right now. I am doing it. What I want you to say is, I did something wrong there. Okay. Is that the 6th of June? That's the 20th. I would even think by the end of May, beginning of June. But in the meantime, I will do this, and I'll do the left side, right side price time match with a Chapman wave inside wedge target. Yeah, I'm sorry. It goes to, my eye says it'll go to the end of May, beginning of June. That there's a chance that if Chewy, CHWY is the symbol, can get over, if it can, tag it or close. No, it needs to close. If it can close above 39.35, it has to get so close to 40. That's the area. If it can get close to that anytime, preferably this week, then in the next week or so, we should be testing this most important recovery high that was made, as I said, and that would be, did I type it in? No, I didn't. That should have been 40.09 the week of the 31st of January. Now, it won't do that if it closes any day this week underneath 35.50. Close under 35.50, I have to say, reanalyze. But as it stands right now, in fact, I'm going to do this because I want to do it as carefully as possible. I'm going to go to that candle, and I'm going to go to that high. And that just says to me, now remember, this is not mathematical. I love it when it's perfect, when the number of bars on the left going down or going up and then coming back to that level are able to be symmetrical. I don't see that right now. It's just too long. I want to be a little bit more aggressive. So I'm saying, as I see it, there's a chance that by the end of May, we should be testing the 40 level. Whew, that was a lot of work, wasn't it? Okay, next question is, where was it? Basil, thoughts on Hood? Thanks. So Hood has been one of our most fabulous positions, and then I just screwed up this past week. I can't say I really screwed up because I was just being as careful as possible in terms of stops. We would still have been in one of the positions if it had, this is the day that I'm looking at, so we got it right there. So if it, instead of going to 51.30 on the 1st of May, was it before that? Of course it was. Yeah, if we were up in the 51s, then one of our positions would have made a little bit of a gain, and the other position I would have been able to say, put in a wider stop down to 46. And even today, what was the low I would have been taken out today? 45.56. And I'm not sure, sometimes stocks rally into earnings. And the earnings come out, and it's not that bad, but it just doesn't perform well. And I look at that and I say, okay, that means that you have to get a new bunch of buyers. All the buyers that were in, and now it needs time just to digest the gains. If it was a winner before, it should continue to be a winner. But that's the daily chart. If you look at the weekly chart, the 9-period moving average is still over the 14. But look, the MACD stalled this last week. Instead of the histogram continuing to gain sharply to go to 0 or plus, it's still negative, and that's the same thing with, you can see the MACD line there, and the stochastic's only at 45% of the week on balance volumes. So I'm a little concerned about it. I'll talk about it when I get back. I think it's worth it because we're in the 16s. We've taken nice gains, but now we messed up a little bit for the 4% loss.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. A question in the Tiger YouTube. Jeff asked to me to look at the 2000 high that was made in the S&P and look at the pattern that's unfolding now and the pattern that unfolded then. I would say, Jeff, look at the MACD, look at the stochastic. Everything had made the high. Even the on-balance volume had made the high earlier on, right at January of 2000. And then we did have that residual high. 50.57 was the high in March of 2000. But look at the high that was made. That is the high right there. So that's a monthly chart. Yes, and then August, of course. So 1557, and then in August it retested at 1530, just under that. Right. So let me go to this chart at this particular moment. There's a difference. You see the difference in the MACD. You see the difference. The stochastic did make its high way back here, back in 2024, and it's been coming down. But look at the 9-period moving average, which is still so strong. Look at the difference. We're going to run out of time, huh? That's okay. So look at the difference between this one here. The 9-period moving average is holding well. So I agree with you that this is something that we have to watch. But so far, I'm saying the monthly chart, as I read it, and the socioeconomic parallels are different. So let me get out of this little chart right here. I'll follow it up. I won't forget about it. I'll follow it up in the next couple of days. But most importantly, what I am looking at here is that look at the Dow. Now it's up $30. That's the buying pressure. The reason why, and today I did want to buy, I wanted to wait a day, and I thought, should I do that? I should do it today. We've already got so many positions. I didn't do it today. I think we might have got one of those that we wanted today. It's okay. As long as it's holding well, we can still get in, even if it's a little higher. But this is good action. I mean, this is really good action. So with that said, I'm going to say if the Dow is able to hold gains and hold maybe a plus 50 after 1:30 this afternoon, that's going to be a really good sign. If it gives back and it's down 150, it says you have to wait a day or two before it really rallies strongly. Stay tuned for Steve Rhodes. Check out Mobley Call.